Welcome back to Trading Wars, and thanks for joining me today, my friends. All right, guys, so I want to go through the week. I want to talk about the trades, and then I also want to talk about margin and small accounts, and I want to talk about options because this is some of the most important questions, and a lot of the questions I get is how to grow a small account with futures, how much margin am I going to need, when should I use options, etc. Okay, so we're going to start off here, guys. So I have all the days marked up. I'm going to be doing a lifetime Discord giveaway at the end, so make sure you stay tuned all the way to the end. And then we're also going to be doing a market outlook. Okay, so we'll start off here on Monday. And what I'm going to do here, guys, is I'm going to zoom in on Monday. Let's just do a full screen like this. And the first thing that I'm going to do is I'm going to go and show you actually the broker statements. Okay, so this was Monday here. Okay, we had one loser of $79.98. And then we had two winners, one for 182.51 and then one for 197.51. So this second idea was the same trade, but we use scaling profit targets. And this was Monday. So netting on Monday about $300-ish on a small account. So I'm going to show you this here. So I just wanted to show you the statements, but let's go back to SPY now and let me walk you through. Okay, so we're going to hit the replay right here. And I'm going to start off with the first trade we took. And the first trade, guys, was it was a Monday gap fill. All right. And we misplayed this gap fill because the stop loss was in the wrong place. This day should have been two winners day for sure. And unfortunately, we misplayed the first trade, but I'm going to walk you through the trade and I want to talk to you about how we can improve. Okay. So here's the first candle of the day. It's a bearish candle. And as you can see here, if you look to the left, this is the price action that happened on Friday. So this is what we call a gap up. And generally speaking, with these gap ups tend to fill the gap, right? Especially if it's not a huge gap and this is a weak market, we're expecting this to fill the gap. So we know that we need to look short, especially with this bearish first candle. But the question is, how do we get short? Well, we're going to use a Fibonacci to get the pullback because we don't want to go right away at the open in case there's a lot of choppiness and then in case we get poked out. Okay, so here we go. So the first few candles gives a nice push down. Okay, and now we start drawing our Fibonacci from high to low like this. And we're looking to short on that 618. Okay, so boom, boom, boom. Here we go. So there's our short entry. And right here, guys, on this second candle, we got spooked out of the trade, unfortunately, because we had instead of keeping our stop loss at the high of the day, we went ahead and moved the stop loss a little bit lower, and we ended up losing about $80 and getting poked out, unfortunately, on that one, because you could see it later fills the gap. And that's why it's important when you're trading. If you are risking off of the high of the day or the low of the day, you need to keep it there because the high of the day, if it's going to be the high of the day, it's going to stay. And a lot of times within the first hour, you're going to establish the high of the day. So if that's where it is, you got to keep the stop loss there. No need to get fancy. So unfortunate play there, but we came right back and got this beautiful winner here. Once we fill the gap, we know the gap fill is going to be an area of support. And we just take our Fibonacci from our low to high. Okay. And then let me just fast forward here. We get filled on that 618 right there, guys. And then boom, the rest is history. Okay. So this was that 618 fill right there. This took us into profit targets into the close. So overall, the gap fill short should have been 30 points, 40 points on the second winner here. And let me just go ahead and I'll show you that one more time. So this is all called out live in the Discord as well. So this 40-point winner right here, you can see we took 2 micros and those 2 micros sold 1 and 1. And then this was the first short. Unfortunate, you can see that we got poked out on this one. But let's continue here now. And let's talk about the margin requirements. Okay, so what were the margin requirements going to be for this? So you can see we took 2 micro contracts. All right. So the first thing that I want to talk about, we'll talk about options in a second, is every micro contract, every point is going to be $5. Okay, so every point is going to be $5. So if we have a 50-point day, a minimum 50-point day, one full size contract is going to be 2,500. That's the ES. But with the small account, you're going to use the micro. So one micro will give you 250. Okay, right now we're trading with 2 micros in this environment. And 2 micros giving us between 400 to 500 in profit with a 2-to-1 risk to reward. Okay. And generally speaking, with a micro, you need anywhere between $1,500 to $2,000 capital in your account in order to trade. You can check the margin requirements. They change, especially if the market goes lower, the contracts are going to be worth less. So then the margin is going to be less. Okay. But each contract, you're looking at roughly 1,500 to 2,000 to hold the contract. That doesn't mean that's how much you're putting in. It means that that's what the broker requires you to actually hold the contract, because it's a leverage product. The reason why I love using futures, though, no DK, no PDT, no Greeks, right? And you're going to see how that comes to be very important later on in the week, because we get choppy situations, and with options, you're going to get killed on that. Okay, so let's continue now. Let's move on to Tuesday. Okay, so Tuesday we had one trade here, the double fib intraday, one simple trade plus 40 points. One contract is going to be 200. We took two contracts, and I'm going to talk to you about the risk of options, but let's go ahead here and let's just pull this one up. Okay, so this was the Tuesday right here. $397.52, two micro contracts shorting at 1043, covering at 155. Let's go ahead and get into the chart. Okay, so the first thing is we're going to full screen. Okay, so this is the Tuesday open here, guys. So if we actually start off with the previous day's range Fibonacci, because you can see the open right here is inside of the previous day's range, we can take our Fibonacci tool from the high to the low like this, and you can we can double click right here, put on the 786. The 786 is a Fibonacci level that I've seen has been working extremely well in this volatile market, because the market is not as clean as it used to be. There's a lot of high volatility swings in each direction. So the first, you could see here, we reject the 786 at the open. So with that piece of information, what we did, guys, is we drew up the next Fibonacci in the sequence coming off. This is the Tuesday high, coming off of this high to this low right here, guys. And we actually use the 618. Okay, so the 618 is pretty much our main execution tool, but we also want to get an idea of where we are. That's in the chart. That's why I put out the PDR. So here we go, coming off the high to the low. Here's our 618 short. This one took a little bit of time to roll over, and this is my next point here that I want to talk about. This chop right here. Okay, so when you're taking futures, so let's say you short right here at 54.30, at 53.40. If you stay at 53.40 for 2 hours, it's not going to matter. You're still going to be at break even. But this chop right here with options, because you're paying for a move to happen within a specific time, like let's say you bought puts, let's say you bought the 540 puts, you would be losing value of your premium in this chop. So this is why right now, my friends, I do believe strongly that the market, after that major volatility spike we had where the VIX shot up, I think the market is trying to contract back down and kill option premiums. I'm actually selling option premiums, so I know exactly, you know, I'm telling you what option sellers are doing. We're selling premiums right now because the market was so super volatile. Everybody thinks the market's just going to go straight back up, you know, and there's so much money to be made in premium selling. So when it comes to day trading, we're focusing on futures. Okay. So as you guys know too, it was a short week this week, right? So let me go ahead and let me show you, there's 2 more days left in the week. So on Wednesday, guys, we lost, you know, there's no other way to say it. We had the first push down. We tried to take the Fibonacci from the high to the low. We got filled on the 618 and we got poked out at the high of the day. However, if we use the Fibonacci from the open gap, okay, we come from the low of this open gap and we bring it down. So right here, we bring it down. You can see a beautiful 618 rejection. So we didn't re-trigger and take that short. Honestly, it's all hindsight right now looking at the chart. At the time, this Wednesday pullback was the best possible trade, and we just took a loss and moved on. Thursday, we decided not to take any trades because we had an inside open. You could see the range on Wednesday was big, and Thursday we opened in the middle, and that is a very low probability trading setup. So we just decided not to trade Thursday. But overall, guys, walking away with about $800 on the week. Not bad. Winners on Monday, winners on Tuesday, loser on Wednesday, no trade on Thursday. Keep it simple. Let's just try to make 500 to 1,000 every week. You know, what's wrong with that? What's wrong with making 4,000 or 5,000 a month? You know, at your peak. Then as you make 4,000 or 5,000, instead of trading 2 micros, you could trade 3 micros. You could trade 4 micros. And once you master the process, the margin is the same. Okay, the margin is the same increment every contract, and you don't have to worry about decay. Okay, so it's so critical, guys. I really wanted to teach you futures, and like I said, no Greeks, no PDT, no DK. I have a full futures playlist, step by step. You guys can watch it below. Also, go to my website, tradingwars.com. Let me show you right now. Go to tradingwars.com resources, and you'll have the full futures trading class right here. You can read this. You can watch the video step by step. Everything is explained. and just go to the resources webpage. You'll also get the indicators and the scanners for free. If you're interested in trading with the SPY VIP with us, one of the reasons I love our room is because we do a lot of live trading. Okay, so if the live trading here, my friends, you could see the live stream Thursday, Friday, and also Monday. We go live. We call out these trades live in real time. You can see we got a lot of, a lot of people learning, a lot of people doing well. And I'm offering a special deal for anybody interested. Go to tradingwars.com, click on the SPY Options Mastery here, and you'll be able to get the book. It's $100. It comes with the broker statements, video recordings, $100. And instead of getting 1 month for free, you'll get 2 months. So I'm going to double it up for you guys, and you'll get this beautiful book. It talks about the right time to take futures versus options. Right now, it's the right time to take futures. And the way that I'm able to prove that is, let's go to the weekly chart. You see this here, guys? Let's go to the weekly chart. Let me just remove these drawings. Let's full screen. This is the weekly chart. You can see we have an inside week. We knew that this week was going to be a very high chance of being an inside week because the range from last week was huge. And this can continue for a while. We can stay in this range and continue to kill option premiums. Therefore, we must be looking for futures trades when it comes to day trading. If we get 2 or 3 more weeks like this, I will aggressively attack leaps, and I will be aggressively looking for, I'm going to walk you through right now, Amazon. Okay, so Amazon, my first one right here. Let's just zoom out. So Amazon, this 50% retracement anywhere in the low 170s and low 160s. If we can get Amazon at 143, 145, I think that'll be a deal of a lifetime, and I'm waiting there. Microsoft, okay? Microsoft, guys, has been hanging around the 618 right here at 370. Picture this, 1, 2, 3, 4, 5 months of red candles. We have a high chance of bouncing back next month. I'm looking for some Microsoft. Google, okay? Same thing with Google, guys. We are consolidating here in this golden zone. So just waiting to see if we can come back down to like the 130s to pick it up. NVIDIA, the last buy we had on video was $88, and we are just waiting patiently to see the next ad. Tesla has been in the same spot, guys, for literally like, if you look back in July, we're back to where we started. So premiums getting destroyed. Apple, we picked up some at the lows, and we're happy on that. AMD as well, we picked up some at the 77 level, which was the 786 Fibonacci. But generally, guys, there's been a lot of weakness in this market. So we're trying to get ready and make sure, I haven't really pulled 2 aggressive trades. The biggest aggressive trade we had was on NVIDIA when I bought at $88. Okay, so this was our last buy on NVIDIA right here. The stocks channels, we have specific channels for each Mag 7. The stocks room is only $100 for lifetime access because it's mainly swings and investments. It's less involved. So if you guys are interested in that, it normally comes with 1 month free. I'll bump you up to lifetime access for $100 if you guys are interested. Plus, you'll get the book. Okay, but that's it, guys. I really think this inside week, selling puts, selling premiums, trading futures is the way to go. I hope this video added value with you understanding the margin. You need a certain amount of capital, but if you have a stop loss with a small account, the lowest you can risk is $5 a trade. Okay, you're going to need more than a point of stop loss. So let's say at least $25 to $50 per day. My challenge to you, risk $25 to $50 to make $100 a day. Let's do that. Okay, once you can repeat that process, then you go from making 100 to making 200, then 400. You keep doubling as long as you keep making money. Okay, so I hope that makes sense, guys. Thank you so much. Check me out, tradingwars.com. Drop a like. The lifetime Discord winner is Kristen Lee Shop LLC. You are the lifetime Discord winner. If you guys want to be a part of the lifetime Discord giveaway for the next run, all you got to do is just comment on this video below. And I really appreciate you guys. You guys take care. God bless you guys.